Debt management plans, what are they? Does this spell the end of your mortgage dreams? Or could your dreams of home ownership still be alive? Today, we'll be breaking it all down. Before we get started, don't forget to hit the subscribe button and turn on the bell for notifications for all things bad credit and bad credit mortgage related. Now, for anyone who doesn't know what a debt management plan is, let me quickly explain. A debt management plan is an informal agreement between you and your creditors, the people you owe money to, for paying back your debts. The idea is that you pay back your debts in one affordable monthly payment that is then divided amongst the creditors. Most debt management plans are managed by a debt management plan provider, which is someone who deals with your creditors on your behalf. So, now you know what a debt management plan is, let's look at what your chances will be of getting a mortgage with one. The first thing that you need to know is that it is possible, but it will really depend on the specific details about the debt management plan. What you also need to know is that having a debt management plan is one of the more challenging types of bad credit to arrange a mortgage with. However, like I said, with the right planning and right preparation, it definitely is possible. So, with that being said, let's go ahead and take a look at some of the key details that a potential mortgage lender will want to look at when you're applying for a mortgage with a debt management plan. Number one, when the debt management plan was set up. Number two, how much deposit you have, or if you're remortgaging, how much equity you have in your home. Number three, what the monthly payment of the debt management plan is. Number four, have all of the payments been made on time. Number five, what all of the debts included in the debt management plan. And finally, number six, what were the circumstances behind the debt management plan being registered in the first place. Now, it is worth remembering that these are the key factors that the mortgage lender will want to look at about the debt management plan specifically, but a mortgage lender will also take lots of other factors into consideration when they're deciding on whether to approve the mortgage or not. So let's go ahead and unpack these 7 points together. Number one, when was the debt management plan set up? Alongside how much deposit you have in your home or equity you have in your home, this is going to be the biggest factor that the mortgage lender will want to know. And the golden rule is the more time that has passed since the debt management plan was registered, the higher your chances of a mortgage approval will be. The exact timeframes go hand in hand with exactly how much deposit you need or how much equity that you need to have in your home. So in the next point, I'll break down exactly what that needs to look like depending on where the debt management plan was registered. Number two, how much deposit will you need depending on when the debt management plan was registered? So the first thing that you need to know, whatever deposit you're putting down, the debt management plan will need to have been registered over 12 months ago, and all payments must have been made on time. And this is whether you're putting down a 5% deposit or a 25% deposit. However, if the debts that were included in the debt management plan have been defaulted, which they frequently are when we see them, then you will also need to meet the lender's default criteria. But don't worry, we do break that all down in a video that you can watch by clicking in the top corner of your screen. Number three, what the monthly payment of the debt management plan is. So this one is important because the mortgage lender will need to factor this in to their affordability assessments. There is no set rule to say that one monthly payment is too high or too much, but just bear in mind that the higher the monthly payment is, the more negatively that's potentially going to impact the amount that you can borrow. Also bear in mind that the amount that will be deemed affordable will be directly relatable to the amount of money that you earn and your other committed expenditure. Number four, have all of the payments been made on time? If you've consistently made your payments for your debt management plan on time and it has been in place for a reasonable amount of time, this is going to put you in a much stronger position. However, if you have been missing payments on your debt management plan, particularly within 12 months of applying for your mortgage, it is likely that your application will be declined. Number five, were all of the debts included in the debt management plan? The potential mortgage lender will want to know if all of your debts were included in the debt management plan at the time it was set up. However, if there were debts that were not included in the debt management plan, they will want to know why this was and if the payments have been made on time. If there were debts that were not included and haven't been paid on time, this could have a negative impact on your application. And finally, number 6, what were the circumstances behind the debt management plan being registered in the first place? Some lenders will take into account what circumstances led to the debt management plan being registered in the first place. For example, if you could evidence that some sort of unprecedented life event led to this happening, there are some lenders out there who might be able to make exceptions. Some examples of what we're talking about here would be if you perhaps had a serious illness, something like cancer, meaning that you were unable to work, or perhaps you had something like a messy divorce. Things like this will typically be looked on more favourably than somebody who maybe took out a load of credit cards, ran up the debt, and decided not to pay it back. So, to summarise, getting a mortgage with a debt management plan, it can be tough. However, with the right forward thinking, patience, and hard work, your dreams of home ownership could still be alive. If you have any questions or ideas for future videos, feel free to pop those in the comments below. Alternatively, you can send us an email and we'll pop that address in the description below. So, thanks for watching. Please make sure that you hit the subscribe button and turn on the notifications for more tips on bad credit and all things bad credit mortgage related, and we will see you in the next video.